If you think about the U.S. economy, in the end of the day, it's a consumer-driven economy, and if we see our consumers, even for the first 3 weeks of October, they're now spending still 9% plus over what they spent last year, which is 1.5 times to 2 times the rate they were spending pre-pandemic, and so that's a good thing. Now, ahead of them, we've got the Feds raising rates and slowing down the economy, and that's what they have to do, which means housing is tipping over in price. That's supposed to happen. Used cars prices have flattened out. That's supposed to happen. So the Fed's trying to slow down the economy, but frankly, working against them is consumers are spending money. They have more money in their accounts, and that account balances are holding, even though it went up after the, with the pandemic stimulus payments, and it basically held on. And then they're all employed. The unemployment rate's very low. The new claims was very low again last week. And then, in the end of the day, they have good credit statistics and have the ability to borrow. So that's good news. It makes the Fed's job harder. But right now in the U.S. economy, that's good news for the world, frankly, because the U.S. consumes and spends money and buys things, all of which will help the world get through this tough time as we get the economies reoriented.
So let's talk about outside of the US, and you said a tough time there. Is a tough time how you would predict the outlook for Europe over the next year or so?
Considering what's going on in Europe, and the war in Ukraine is a horrible thing for the people involved, et cetera, but also it's preoccupying for the economy, the energy crisis around that. Those are all things which need to straighten out. The constitutional crisis in various countries, getting new leadership in place and getting a common view for the Europeans of how they're going to attack the energy crisis and other things. Those are all important things, critically important things. So that all has a drag on the economy, energy prices being up, shutting down factories. Those are very tough things to get through, and we hope that we'll see that mitigate as we go through 23. And on top of that, we've got to get interest rates back and slow down inflation. And inflation's in Europe and inflation's in the U.S. And the jobs of the central banks were to flood the zone during the time of crisis and the pandemic, but now they've got to back off and let the economy rebalance. And it's a tough time to do that given the circumstances around these economies.
In the UK in recent weeks, I'm sure you saw the volatility in the bond market and the particular issue of LDIs and too much leverage in certain individual pension funds. When you saw that, did it remind you of 2008 and make you feel like there could be other gremlins hiding out there that could trigger another financial crisis?
We always look for, if you think about the Princess and the Pea analogy, under all those mattresses, you're always looking for that pea to figure out where the risk is and where the risk gets bottled up. And you saw some of that come out when you had a particularly strong movement in the gilt, in the bonds in the UK. But the market now, it loves stability. They like no change or little change or predictable change, and you're seeing it settle back down given the circumstances of the last few weeks. But that was interesting. We looked around and said, where else could this infect the economy? But the good news is the banking systems across the world are in pretty good shape. The consumers are in pretty good shape. Unemployment's been low, and the pandemic was a horrible thing for everybody to go through in the world. But on the other hand of it, we're still recovering out of that, and the economic activity's still picking up to match that. And so we've got some other issues ahead of us, but that's good news, and that provides a little bit of wind in the sails.
As you said, things have calmed down a little bit in the UK. They picked up in the weeks between the mini budget and today. A new Prime Minister in place in Rishi Sunak. How important is it for the UK to now have a period of political stability?
I think the UK is one of the leading economies and leading countries in the world, and is a bastion of stability in general sense. And so stability in any country is good. Stability, we got to go through a midterm election in the U.S. We got to get to the other side of that, and then the stability can settle in. You've had the changes in Italy, and you've got the elections in Brazil and stuff. So there's a lot of change that goes on, but the key is to get it stabilized and get through the period so people can settle down and be more predictable. And I think you'll see that take place in some of these economies as these elections take place and we get to the other side of them. So we always say our company's been around. It's not a big deal in the case of the UK, but we've been around since, for 230 plus years. So we've been through a lot of elections, and our job is just to manage through them. And so we don't get too wound up about any one of them. It's always something in the moment, but it's the population's job to elect their officials and our job to manage our company given those elections.
Well, it's reassuring to hear, Brian, is the biggest retail bank in America with multiple thousand employees here in the UK, most of which in London. The volatility of the last few months hasn't changed your view on whether to keep those people here?
It's a great place for people to work. We've done a lot on the Brexit move, which seems like ancient history now, given all the things that have happened since then. But we've resettled our population of employees. So our employee base is a great set of teammates in London. I'm going to see them later this week, and they do a great job for us. And we're committed to the country, and we'll continue to those teammates and continue to build out, given the circumstances, the markets, and what we can do.
And Rishi Sunak himself obviously was finance minister, but before being prime minister as of today. Have you ever come across him personally? What's your view of him?
I've met him at some of the usual events that CEOs of large banks meet finance ministers, and so if it turns out and it's all official today, which I haven't caught up to the latest. Good luck, and we'll do our job to support him as we did our job to support the past PMs in that country and other countries around the world.
Stepping back a little bit from the craziness and the volatility, obviously only one of the various factors that led to Liz Truss's downfall was over-promising, I think it's fair to say, on tax cuts. One of that was on corporate taxes. Would a lower corporate tax rate, all else equal, in the long term in the UK be something that from Bank of America's perspective, would be a good thing?
Governments have to get a balance between taxation of corporations, individuals, and what they spend the money on, and that's a long-term problem for all governments. So the UK government's no different from the US government or from the Canadian government or for any other government. So I think getting that tax policy right, getting those levels right, and you saw that with some of the work that's being done around these agreements around minimum tax rates for the world. People shouldn't be bidding for people's business on tax rates, because ultimately that leads to things which get a little out of skew. So I think the key is to have a consistent rate where people can invest across long periods of time that's fair to the companies and fair to the people they employ and fair to the business they generate and tax revenues they generate, and then also fair to the citizens so the governments can do what they need to do. And I think those things settle over time. They go up and they go down, and we don't live or die by our tax rate. We live or die by having great customers, doing great things with them, generate a lot of revenue, keep expenses in check, generate a lot of pre-tax income, and then we'll figure out what the taxing authorities do. But it's good. It's always good if you're paying taxes like we pay a lot of taxes. Is it good to be lower? Sure. But on the other hand, we realize as a company that the need for tax dollars to help governments do the work they need to do, from making sure their citizens have a good standard of life, investing in future infrastructure of the country, investing in the transition of energy, investing in roads and things so that people can get to work, and transportation systems and welfare and food. And that's all incredibly important things. So we're balanced about that. It's not, we don't turn off or turn on a decision based on a tax rate in a country unless it's way out of line.
And Brian, clearly one consequence of recent months has been a much weaker euro and a much weaker pound relative to the US dollar. Could we expect US companies to be looking to buy some companies across Europe and the UK in the year ahead? Longer term, when the market settles down, especially for the private equity firms and the debt side of it, in other words, there's predictability to get debt done in the market, I think you'll see it pick back up. So the backlogs are huge, frankly. There's a lot of conversations going on, a lot of deals in the pipeline, but you just need stability in the market. And frankly, you need people to settle in the prices they're trading at today versus what they may have been trading at a time when the market was a lot higher, to just get used to. Sellers have to get used to their price and get used to the premiums that might be available to them. You have to have debt predictability so you can get the deals financed. And frankly, you have to have some view of the future. It's hard to invest into a recession. And our economists and most economists around the world predict recessions in various economies over the next 12 to 18 months. And so it's hard to invest into that. And that's why people are sort of waiting it out right now.